Hey, what's going on, subscribers? Welcome back to another brand new video from the Flaming Profits YouTube channel. Today I will be talking about how to successfully begin your profitable swing trade investments. So this is my favorite type of investment style, where I take advantage of an undervalued stock and buy a lot of shares of it from when it's undervalued until it becomes fairly valued or overvalued. And I've done this a lot with many stocks, so I have a lot of experience doing this, and I want to share my favorite tips to become a profitable swing trader. But before we get started, make sure you hit the subscribe button for the Flaming Profits YouTube channel. Let's get to 150 subscribers. That's my goal. So go ahead and subscribe so that you do not miss out any brand new videos from this YouTube channel. We make amazing financial content related to the stock market, as well as saving money and other things like that. So make sure you subscribe and like this video as well. Make sure you leave a comment as well what you thought of this video. I do have some amazing referral links that I do not want you to miss out on. So this is a free stock with Robinhood. As soon as you sign up, all you have to do is use the link that I have there, and I'll have this on the description as well. It's my favorite brokerage that I use for all of my swing trades, and I highly suggest it. This is M1 Finance, my favorite investment brokerage when it comes down to dividend investing, because it allows you to reinvest dividends automatically. This is $10 for your portfolio. Just use the link in the description. And then Acorns, my favorite app when it comes down to saving extra money, because this links to your debit or credit card and invests for you as long as you spend money. So it rounds up your change and puts that into your investment portfolio. And then the last referral link I have is for my favorite selling platform, Mercari. You get $10 off any single purchase you make with this app. It's available on iOS and Android. It's very good for selling things around your home that you don't have any use for. So I would highly recommend you. It's a great way to make some extra money on the side. Alright, so without further ado, let's go ahead and get started. How to properly swing trade to become a profitable swing trade investment. Alright, so let me give you some examples. So I'm in the beginning stage on all of these swing trade investments, and I'm going to show you them one by one. So this is Tesla. Right now I have 2 shares at an average cost of $223.40. So right now there's a profit margin of $3.40 on my shares. So right now I have a $3 safety cushion between my average cost and the cost of the shares right now. And I will keep this up as long as the cost per share continues to go up for Tesla. I'm going to continue adding shares, and I'm going to keep my average cost lower than the cost of the shares at the moment. This will allow me to gain my profit as I build more shares. And the more shares you have, the more profit you're going to make. So I will continue buying as long as the share price of Tesla continues to go up. If it remains stagnant or continues to drop, you should have a mental price where, for example, if my average cost is $223.40, I'm going to sell all of my shares if it for some reason reaches $224. And as long as you continue to have that mental barrier and automatically sell at that price point, if it drops below that, then you're always going to make money, because either you make a certain profit amount by it reaching $224 and you sell automatically, or you continue to build and add shares to it. And as you add shares, you become more profitable, so your total return gets bigger and bigger. And I found this to be a great deal right now, because it recently has been going down a lot, and I see a huge profit margin from $264 to where it's at now. Obviously there's no earnings coming up or any catalyst that's really making the stock go up recently, so it's not gonna be that much of a difference. But as long as it gets to, like, for example, 230, that will be a nice good profit for me to take. Alright, and the next stock is Tapestry. So this is a new position as well, a new swing trade investment. Right now I'm up $1.88. I have 4 shares at an average cost of $20.50. So I'm going to continue buying additional shares as long as the cost per share of Tapestry continues to go up in value. If it for some reason reaches really close to my average cost, then I'm automatically gonna sell because I'm not gonna lose money from swing trading. I'm only gonna make money or basically stay even and not lose any money. That's basically my strategy. There's pretty much ways that you're always gonna be profitable with swing trade investments. You just have to continue watching the stock and make sure it doesn't get near your average cost. And once the shares go up in value, continue buying more shares because the more shares you have, the higher total return you will have. And usually from my swing trade investments, I make anywhere from 5 to 15% return from the swing trade investments. And this overall helps out your total return in the stock market because those total returns adds up. So normally investors look for 20% in a year, but if you're able to get 5 to 15% consistently every month, 2 months, 3 months, in the long term, you'll end up with like anywhere close to 40 to 50% total return on your Robinhood portfolio. So you just have to build the strategies, keep it simple, buy one share at a time, only buy an additional share if the average cost of the shares are going up. So as long as it continues to go up, keep on buying more, but keep your average cost low, and don't buy any shares if the price of the stock is less than your average cost. This causes a lot of problems for investors because they end up backholding stocks and they end up having a lot of money in a stock that's not even profitable. So don't make that mistake. Only buy if you're profitable. Don't continue buying if you're not. When you initiate a position, you start with one share. Don't continue buying unless the cost of the share continues to go up higher than your average cost. This is a big mistake that a lot of swing traders make. They're constantly buying as it goes down in value, but you definitely should try to avoid that. Only buy as it goes up. It's actually very simple. You just kind of have to stick to it. And you're not always going to be up. There's going to be times when you initiate a stock position with a certain stock and you're going to be down. But it's no big deal as long as you're consistent and you stay disciplined with the strategies that I'm sharing with you. You'll definitely end up with a profitable swing trade. Like for example, this is TWOU, a massive sell-off. There's absolutely huge amounts of profits to be made with this stock because it's severely undervalued from its max. And it recently happened where it went down by a lot. It pretty much lost like 80 to 90% of its value. But there's absolutely no reason why the stock should have gone down that much that it did. So I see a lot of value in the stock. I have 4 shares at an average cost of $17.24. So it can happen that the cost of the shares go less than your average cost. But whenever this happens, just like I'm saying, is now that I have 4 shares, I'm not going to add a 5th share unless the cost goes bigger than my average cost. So if the stock price of TU goes up to $17.30, then I'll go ahead and add another share. And then I'll only buy another share if the cost of the share is bigger than my average cost. So that's how I continue adding more shares. And this has helped me a lot. So right now I'm down 18 cents, but no big deal. I'm just going to hold it, and I'm only going to add shares if it's increasing in price. So this is a big mistake. Most people will continue buying as it drops, but there's no reason why you should be doing this. When you initiate a position, the most you're going to lose is that cost of one share. And this is a lot better than risking a lot of money by putting money into an unprofitable investment. So now I'm going to show you my last swing trade position. This is Salesforce. One thing that helps you a lot with swing trade investments is if you know a company is about to report earnings, the stock can be a lot more volatile because it's anticipating either a big gain or a big loss from its earnings. But this is actually a good catalyst that you need to pay attention to. So CRM Salesforce is going to report their earnings on August 22 after hours. So this is in about 2 days. And this is good because I see a lot of buyers are going to want to buy the stock before earnings, because they might think that the stock's going to go up in value during earnings. And it does have a fair value of 186, so it's definitely like $40 down from its fair value price. So I take advantage of undervalued stocks. Like it used to be 159, so that leaves like about a $10 profit margin that I can easily make. And I might sell during earnings or before earnings, depending on where the direction of the stock goes. And like I said, continue to buy shares as it goes up in value. So right now I'm down $2.15, but like I said, the most I'm gonna lose is 145.85, which is my average cost. So as long as you continue to buy shares, as it goes up in value, then this is no big deal. You'll see that my swing trades, the ones that I'm down on, will easily pick up, and I'll be up on, as long as I continue to follow that discipline where I'll only buy if it goes up in value. If it goes less than my average cost, then I'm gonna stop and not buy anymore. It's very simple. You just have to stick to it. Don't be greedy. Don't think you know better than this disciplines. Just stick to them. It's very easy to follow. You should definitely be a lot more profitable with your swing trades as long as you stick to the disciplines. Don't think that you're smarter than the disciplines. Follow them, and you'll succeed. So let me know if you're gonna try this. Also, how it's going through your swing trade position. And one thing that I want to point out is all of my swing trade investments, all the stocks I invest in. If you look up the max chart on any stock that I mentioned, it's always uptrending, and this is something so important that you need to pay attention to. You should only be investing in stocks that overall grow in the max chart, because your portfolio is going to end up looking like the stock you're investing in. So if you look at the max chart of any stock you're interested in investing, you should ask yourself, is this how you want your Robinhood portfolio to look like that stock? If your answer is yes, then go ahead and invest in it. If your answer is no, then don't invest in that stock, because overall your portfolio is going to reflect that stock. So if it's a downtrending stock on the max chart, there's no reason why you should be investing in the stock. You're simply going to lose money, because that's what the stock shows. So pay attention. Only invest in companies that are overall growing year after year on the max chart. Yes, take advantage of swing trades when the stock is undervalued, but you know that this is overall an uptrending stock, so there's no risk involved. And as long as you follow those disciplines, you should be successful in swing trading profitably. So thank you all so much for joining me today. I really appreciate it. Thanks for taking your time to enjoy and watch this video to learn. I hope you instill these disciplines and let me know how it goes. I really appreciate you watching this video. Comment down below if you have any questions, what you thought of this video. Did you learn something? Let me know, and like this video as well. Thank you all so much for joining me today. Make sure you're subscribed so that you do not miss any newer videos, and I'll see you on the next video. Peace.